traders in. Hope you guys are having a wonderful day. Today we're going to talk about some of the trades that we took and just cover what happened in the market. So looking at the S&P 500, first of all, we want to take a look at the daily time frame and just to see what the market is doing, right? So overall, MACD is crossing to the downside. RSI also bearish, right? We're losing momentum here. And if we look at the volume, there's been continuous sell volume at important levels. For example, 457, 460 was an important level. Now we're down to about 420 here. These are big zones right here. So this supply. Now we got a demand zone. If you get this demand zone taken out, we're going down to about 415. Very, very easy. All right, and below that we got about 405. So it is important to know where the market is, right? So right now this could be considered as distribution. Shares are trading hand back and forth. Past few days we had an average amount, which is higher than usual amount of selling, right? So if we just compare the selling, this is continuous. So 1, 2, 3, 2 days of pause and another 4 days of selling. All right, so this is a sign of weakness. This is a sign right now sellers are in control, bears are in control. If buyers want to come in, I want to see, first of all, 435 taken out, then I want to see 445 taken out, then I want to see 450 and then 460. I want to see the momentum build. Right now, there's no indication of the momentum building here, all right? So when we're day trading here, so some of those trades that I did take based on this, I saw the volume come down, okay? In the sense, right in the morning, it tried to pick up, to show us that it may make a higher move. Unfortunately, not able to do that. As soon as this crossed over, the 5-day EMA crossed over the VWAP, waited for the break of the 432 level here, and this big candle to come in to take that position here, right? So, and my stop loss, or when I exit, is at the close, when price closes above the 5-day moving average, so which is right about here. So the candlestick, so see this wick, it went through, but it didn't close. It has to close above the 5-day. So it closed above here, great move here. So I was able to exit my position perfectly fine right about here. Once I take profits, I don't want to get into a position again until the stock has pulled back some more, right? If it's gonna, or it might just consolidate and not even give me a setup to trade for the rest of the day. So what I want to do is I want to wait. I want to wait for my setup to come to me. It did come at this cross right here. Enter the same when the price crossed below here. Idea is to once price closes above the 5-day, I'll close my position. As you guys can see, that gave me until right about here. So 2 swings to the downside where it was a nice play on S&P 500. The other play that I did take today was Tesla. Similar thing. I was looking at Tesla, was looking at the bigger picture on the daily, completely breaking down here. This is a big level right here, about the 791. At this break, this is a nice support level that it has. These are April highs, I believe. So just below the April 2021 highs, it's just below that. The next support level I have on Tesla on my charts, right? It's this one right here, but I believe the stronger support easily is right about here, about 650, right? So Tesla is breaking down. It has made these moves before. Okay, so I wouldn't be too worried looking at Tesla. Tesla has done stuff like this before, but in terms of day trading perspective, just gotta realize where the pressure is. Just like in an up move, right, you got some peaks and valleys. Same thing on the downside, right? We're getting pullbacks and we're getting breakdowns here. So right now we're in a complete breakdown. We want to see if Tesla can find some sort of pullback here and find its way above 850 level here, so it can start to continue a push to the upside. Unfortunately, if it goes here and it fails, it's gonna come down very hard and very fast, right? So keeping that in mind, looking at Tesla here on the 5-minute, we saw the morning, not much going on in the 5-minute candle, just trading in a range. The next one, try to break down, but this is where I took my trade. Price, the 5-day and the VWAP got below here, right? The price did go below it. I held below it. I wanted to see this candlestick right here, close right here. So this is still the same pattern right now, holding really well. Price is still at the 5-day here. So held this, and then you just see complete just sell off right here, right? And then at this move right here, I was able to exit my position, but this was a nice 20-30 point move down. right? And then I waited for a pullback to happen. Pullback did happen. Price did go up. Then it started to cross over, right? And I did take some more trades on Tesla for the day, but they were just quick scalps, right? And Tesla still looks weak, and this is one of my trades. But to keep in mind, it's quick entries and exits, right? So if we look at Amazon, this is another trade I took based on the fact that, you know, it does have a gap to fill. If we just look at this bigger level here, Amazon, the earnings gap right about here, around 28.97, right? This is where the wick is. It can go for the fill right about 28.35. So this is a good fill of the gap, and we can start to see if we can get a bounce to the upside here. If not, we can have a further move to the downside, right? With Amazon, a big level meaning right here, 27.74 and 2,700. So looking at this in the pre-market today, I simply just took a position. Same thing when price got closed below the 5-day, right? So I did take a position right in the morning to give a quick loss, and I got back in for a nice profit here, and then pull back and a second scalp here, right? So looking at these great opportunities with Amazon with this strategy here, worked out for day trading, quick scalps in and out. But overall, the market itself, I am a little bit concerned. I think we're in a bearish market. I am very bearish on this market. Looking at the S&P, so let's have a look at the QQQ here. Right, QQQ broke this symmetrical triangle. We're down about here below the January lows. So January lows was 334, and right now we're at 330, 329. And this is my next level on the Qs actually, and we're already at it. Right, so if we break below this, we can easily see 315 very fast. Right, there are some levels, like minor levels on the way down, that I would concern myself with. For example, right about here, 324 and 315 are these levels. So right now the Qs are back to about January 2021 levels, right? So we're back we're almost back a full year, right? So this is how quick this market is moving. It's taking out, like, you know, 1 whole years of gains in a few days. So you have to understand, right? So when we look at the market, or how I teach to look at the market, is waves. So if it's a Wyckoff methodology, if we look at this, when a market is in a healthy uptrend, you will see that the consolidation time frame is shorter, and the waves up versus the waves down is smaller. So for example, you have your wave up here, pullback is small, wave up strong. So you have a breakdown here. This is the first sign that warns someone like us that possible breakdown is here. So this is our low. You see this wave up. So let's just say when this pullback happens, you see a consolidation. You see this wave holding right here, and then you decide to enter a long position. This is a good idea to get long, because this wave up is still dominant. Then you take a long position up to here, it's perfectly fine, right? Then we see a pullback here. We see this low getting violated, right? So then that's a good opportunity to take a short, but the bigger position to take a short would be below this, because this is where the consolidation happened and the move higher happened from. So this actually held the support right here. So this is still higher than this. So this is a higher low. So this is a bullish sign still. So you got this wave coming up. Got a pullback, all right? So now we have a pullback here. This is another opportunity to go long here, right? So because the same concept, right? This is a pullback. Pullback is shorter than the wave up, right? Pullback is small. So this is where you could take a long position, have your stop loss at maybe the previous low, which is the previous peak, which is right about here, and let the position run. And with this, we can see a pullback short compared to the wave up. Continues to move up. Pullbacks are getting shorter, tighter, right? So this is the first sign where we see the pullback being really strong, right? So this basically wiped out pretty much a good couple months of gains, right? But we got to look at this and say, okay, where's the next low? The next low is at 280, 283. So we're still okay here, right? But this is a warning sign to me that, this is a steep correction. but that's okay, because in the market we also have to realize there's always a 10 to 15% correction, or on a regular year-to-year basis, right? So this correction, if we just take the info line right here and we just check it, so this is about 10%. Okay, great. So nothing to worry about. Just a healthy correction. Okay, still higher than this level. All right, so this is another opportunity where we can get, there's multiple opportunities to go short based on the waves, which I discuss. If you want to learn one-on-one, or if you want to just reach out to me, which I discuss in my personal teaching classes, that is important to look at. So then we have a zone here, right? So we can see, okay, this was the previous high. This was the low. This is the area where price consolidated from, and before it made a move higher. As we can see, it consolidated here. This is fine. This was a wave up, right? Still holding here. Nice move up. This is strong. And it comes back down, but this is still higher. This is still higher than this wave right here. Okay. So, which gives us an indication that the market is still moving to the upside, and we just continue to follow that move, okay? So, this is a good bullish market right here. So then the second problem kind of comes at this wave right here. So this wave down, it gets aggressive again, but then we look at it, we're like, all right, it's a pullback here again. Let's see how far this pullback goes. This is steeper now. This is 7.6, not 10%, but this is pretty steep compared to what we had previously. So 7.6, nothing to be concerned about. Not a 10% pullback. It's perfectly normal in this market, right? So we follow this wave, still higher than this wave. This is where the market was, and now we get a wave up, right? So then we reach this pivotal point here, where we get to a high and we get to a low, right? What we start to see here is we start to see a consolidation, and the waves and the retracements are getting just like really, really strong here. They're just really fast, aggressive to the downside. And then we can continuously see the volume here on the wave up is very gradual. The waves up are very strong. They're nice. They're healthy, right? Whereas right about this area is where we start to see a change in direction of the market. Okay, so right about here, if you observe how the market is moving when this started to happen, this gave us an early warning sign that things were off balance. Okay, if we just look at the candlesticks here too, it's telling us like, this very tight range, breaks down, pulls up, and even the move up, right? You see these candlesticks, they're not very wide, they're not very long, they're very tight, right? And then it goes into this consolidation zone. So if we look at this, all right, so it's getting tight here, breaking the uptrend, all right? So then this wave down, we can see the selling pressure aggressively pick up, right? And the selling pressure has been picking up, and we can see, okay, the wave up comes here, all right, that's fine. This wave is still higher than this wave, so this is still bullish here at my point. And I want to look at the correction here. How far of a pullback is this? So we take the top line to here. So we're at 14.92%, and today we're at 18%. So this is a 20% almost correction, right? So 14% pullback, we have a wave up, great, but the wave down again is dominant, right? So this is starting to show me a trend change. So as we mark these levels on the way up, you're getting your supply levels. You're getting your levels of support where NASDAQ or where the QQQs have support at. So looking at this, we're right about here at this previous support at 328. We can come down to 314, then to 300, then 280, right? And then about 269. So looking at this, we got some ways to go, but we got a gradual downside move coming, and it is happening very quickly, right? So even though the RSI might reset, we might get a pullback here, but remember, to move higher, we have a lot of levels to get through, right? So that's something to keep an eye on, all right? But for now, this is why I'm bearish. If we look at SPY, I'll do a quick analysis on SPY as well. So same thing here, the wave down is way more dominant here. We have consolidation here, and we see this wave here versus this wave. The pullbacks are not that strong, so I want to see strength in pullbacks. Unfortunately, we're not seeing that. There's no evidence for me that there's buyers who are buying the dip. There's no evidence for me for that. Okay, so even if other people are seeing that, I don't personally see it. So if you guys want to give me some sort of guidance, where you guys see that the markets are coming back together. Great, I would love to see that. The other thing I focus on, or what we want to look at, is what is performing well year to date. All right, so we got semiconductors down about 18%. Retail stocks are down about 20%. Tech is down about 17. IWM 14, SPY's down about 11. We got value down 9. Utilities down. We got financials down. We got jets that are okay. They're hanging on. They're not down that bad. Then what's performing really well is gold, silver, commodities, and energy. So these stocks, when they perform, this sectors when they perform, remember, these are defensive sectors. So if these are performing well, and it makes sense why SPY is performing the way it's performing, because S&P 500 is, this is clearly showing the money is flowing into commodities. It is flowing into silver, gold, energy. So if it's going into defensive stocks, that means people are spooked in the market based on what's going on. If we want to see speculation, we want to see growth. We want to see growth moving. We want to see triple Qs up. We want to see XLK up. We want to see utilities up. We want to see consumer discretionaries up. Right now, we're not seeing any of that. Right now, we're seeing these 4 top leaders, and that's a high indication that the market is in a possible high correction. Okay, so possible correction is continuous, and it's possible that's going to come until we start seeing money, right? So as an investor in the market, you have to be adaptable. You have to have one way to look. You can't have one way to look at the market. You have to have multiple ways that you should look at the market. All right. So this is my quick analysis on what I think is going to happen right now. We'll see what happens tomorrow when the market opens.